Is the US housing market finally cooling down? After years of skyrocketing prices, some cities are about to hit a major reality check in 2025. Which booming hotspots are turning into buyer nightmares? Is your city on the list? From Texas tech hubs to Florida's waterfront retreats, these markets went too high, too fast. And now, prices are set to crash hard. Will this be a golden chance for buyers or a disaster for homeowners? Number 10. Riverside, California. Riverside, California, a city that's been riding a massive real estate wave over the last few years. If we're talking about skyrocketing home prices, Riverside is the poster child. Between 2020 and 2023, Riverside saw a staggering 50% increase in home prices. What used to be an affordable suburban alternative to LA has now become a high-demand location, with the median home price soaring to around $550,000 as of 2023. And that's a big jump from $360,000 just 3 years ago. The appeal? People escaping the sky-high prices of Los Angeles have flocked to Riverside, which offers more space and a lower cost of living. In fact, between 2017 and 2022, Riverside's population grew by nearly 5%, with thousands of people making the move from pricier areas. But here's where it gets interesting. Riverside might be on the brink of a market correction. Why? Well, first off, with mortgage rates hovering around 7% in 2023, monthly payments have risen by about 30 to 40% compared to 2 years ago. Take a look at this. If you were to buy a $550,000 home with a 20% down payment today, your monthly payment could easily top $3,000, not including property taxes or insurance. That's a far cry from what many buyers were paying just a couple of years ago. As the market cools, we could see prices in Riverside take a dip in the next couple of years, especially as more buyers get priced out. Plus, California is known for its unpredictable housing market. A potential slowdown in job growth or even some state policy changes to address affordability could hit Riverside harder than expected. So, while Riverside's charm is undeniable, its future as a real estate hotspot may depend on how quickly the market corrects itself. Keep your eyes on this one. It could be a big opportunity if you're looking for deals in 2025. Number 9. Dallas, Texas. Dallas, Texas has long been a major player in the U.S. housing market, boasting a strong economy and attracting new residents from across the country. However, after experiencing massive growth, things are finally cooling down in the Dallas housing market, and experts predict a sharp decline in home prices by 2025. Over the past 5 years, home prices in Dallas have surged by an astonishing 50%, with the median home price hitting an all-time high of $400,000 in 2024. This is especially alarming considering that Dallas has traditionally been known for its affordability compared to cities like Austin and Houston. However, as interest rates remain high at 7%, many buyers can no longer afford the inflated prices. A $400,000 home at 7% interest will set homeowners back $2,800 per month, a sharp contrast to the $1,600 per month mortgage payment a few years ago, when rates were at 3%. And it's not just mortgage rates that are driving people away. Affordability issues are front and center. The average household income in Dallas is about $80,000, but after accounting for rising living costs and mortgage payments, homeownership is becoming increasingly unattainable for many. In fact, the Housing Affordability Index for Dallas has dropped by 15% in the past year, signaling that fewer residents are able to purchase homes at current prices. This is a major red flag for real estate professionals and signals a coming shift. Adding to the pressure on home prices is the flood of new inventory hitting the market. Over the last 3 years, developers have built more than 50,000 new homes in Dallas. However, this oversupply is now turning into a problem, as sales have begun to slow. Home sales in the city have dropped 25% in 2023, and listings have spiked 30% compared to the previous year. As demand cools, sellers are slashing prices to attract buyers, further fueling the decline in home values. Dallas is also seeing a decline in migration, a trend that was once a major contributor to the boom. The city saw an influx of people moving from high-cost areas like California, But this migration has slowed, with net migration dropping by 12% in 2023. People are increasingly realizing that higher property taxes and inflated home prices make Dallas less attractive compared to other affordable cities in Texas and beyond. As demand weakens and inventory piles up, experts predict that Dallas will see a 12 to 15% drop in home prices by 2025. If you're considering buying a home in Dallas, waiting it out might save you tens of thousands of dollars as the housing bubble bursts. Number 8. Salt Lake City, Utah. Salt Lake City has seen its fair share of explosive growth in recent years. The median home price has climbed by nearly 65% over the past 5 years, pushing it to $500,000 in 2024. What once was an affordable market has now become a hotbed of speculation, and with interest rates at 7% and affordability dropping, the stage is set for a major correction. Part of Salt Lake City's rapid rise in home prices can be attributed to its pandemic migration boom. Thousands of people, mostly from higher-cost states like California, flooded into Salt Lake City, hoping to escape expensive housing markets. This migration influx pushed the market into overdrive, with demand outstripping supply and causing price appreciation rates to spike by 20% in just 1 year, 2021. However, this boom was unsustainable. The increased demand came with an unsustainable level of new construction, as developers scrambled to build new homes to keep up. Now, as mortgage rates remain high and homebuyers face monthly payments that are 35% higher than they were just a year ago, Salt Lake City's market is beginning to show cracks. A $500,000 home in 2024 costs about $3,500 per month with taxes and insurance included, making it unaffordable for many would-be buyers. Meanwhile, the average household income in Salt Lake City is about $85,000, and according to recent reports, over 50% of residents are spending more than 30% of their income just to afford housing. The inventory levels in Salt Lake City have increased dramatically, rising by 40% from 2023 to 2024. Despite the increased inventory, home sales have decreased by a whopping 40%, which has led to more and more homeowners slashing prices just to sell their properties. This oversupply is likely to continue driving prices down. Additionally, Salt Lake City's job market is starting to slow. Although the city had a strong employment base in industries like tech and healthcare, the tech sector has been hit hard by layoffs and job cuts, leading to a slowdown in hiring. This has directly affected the number of potential homebuyers in the area. In short, Salt Lake City's housing market is experiencing a meltdown. Experts predict that home prices will drop by 10 to 15% in 2025 as demand cools and affordability becomes more of an issue. If you're eyeing a home in Salt Lake City, waiting it out could save you big money. Number 7. San Antonio, Texas. San Antonio, Texas has long been one of the most affordable housing markets in the state, offering great value for homebuyers seeking more space and lower taxes. However, in recent years, the market has been on fire, with home prices jumping by 45%, reaching a median of $290,000 in 2024. While this growth has been impressive, it's not sustainable, and experts predict that prices will plummet in the next few years. San Antonio's housing market growth has been fueled by an influx of new residents, many of whom have moved to the city from higher-cost areas. In fact, more than 10,000 new residents relocated to San Antonio in the past year alone, further pushing demand for housing. However, as interest rates rise, many of these newcomers are reconsidering their decision to buy. A $290,000 home at current rates requires a $2,100 per month mortgage payment, which is 25% higher than just a year ago, leaving many potential buyers out of the market. Another major issue facing San Antonio is overbuilding. In the last 3 years, developers have added over 45,000 new housing units to the city, far outpacing demand. With too many homes on the market and fewer buyers able to afford them, competition is fierce. This has led to a surge in price reductions, with many sellers slashing prices by 10 to 15% just to attract buyers. The job market slowdown is also playing a role in cooling down the housing market. While San Antonio's economy remains strong, certain sectors, particularly tech and finance, are beginning to face job cuts and slower hiring. In fact, recent reports indicate that job growth in San Antonio has slowed by 5%, which means fewer people are moving to the city and fewer new buyers are entering the housing market. All these factors, overbuilding, rising mortgage rates, and slower job growth, are combining to create the perfect storm for a housing price crash. Experts predict that home prices in San Antonio could fall by 8 to 12% in 2025, making it a prime opportunity for those waiting to buy. If you're considering a move to San Antonio, hold off a little longer, and you might score a better deal. Number 6. Tampa, Florida. Tampa, Florida has been a hot real estate market in recent years, thanks to its combination of sunny weather, coastal living, and affordability compared to other parts of Florida. Home prices have skyrocketed by 50% in the last 5 years, with the median home price in 2024 reaching $400,000. However, as mortgage rates have soared and demand has started to slow, experts are predicting a sharp decline in home values by 2025. Tampa's housing boom was fueled by an influx of residents moving from high-cost cities like New York, Chicago, and California. People flocked to Tampa for its lower cost of living, sunny climate, and access to beautiful beaches. As of 2023, Tampa was one of the fastest-growing metro areas in the U.S., with an annual population growth of over 3%. This led to an increase in housing demand, and as a result, prices were pushed higher. However, things are starting to shift. High mortgage rates have hit Tampa hard. The average 30-year fixed-rate mortgage is hovering around 7%, which has made home buying more expensive. A $400,000 home now costs $2,800 per month, which is about $600 more than it would have been just 2 years ago at lower rates. This has caused many potential buyers to pull out of the market, and in turn, home sales have dropped by 15% in the past year. Additionally, Tampa is seeing a growing inventory of homes. With new construction booming, the city has seen a surge of new homes hit the market, adding to the already crowded real estate scene. Listings have increased by 25% in the last year, yet demand is starting to plateau. In fact, home sales have decreased by 20% year over year, signaling a cooling of the once booming market. Sellers are starting to cut prices, with many dropping their asking prices by 10% or more just to secure a buyer. Experts are predicting that home prices in Tampa could drop by 10 to 12% by 2025. With affordability issues becoming more pronounced, especially for first-time buyers, Tampa is poised for a price correction. If you're considering buying in Tampa, it might be best to wait for the market to adjust and offer better deals. Number 5. Palm Bay, Florida. Palm Bay, located along Florida's picturesque Space Coast, has experienced some of the fastest-growing housing prices in the state. The median home price has shot up by 40% in just 3 years, reaching $300,000 in 2024. This dramatic rise in prices has made Palm Bay increasingly unaffordable for many, and experts believe the market is heading for a sharp decline. Much of Palm Bay's housing boom can be attributed to its affordable coastal living, which has attracted buyers looking for cheaper options than the more well-known cities in Florida, such as Miami and Orlando. Over the past few years, Palm Bay has seen a massive influx of people from other states, particularly Northeasterners, escaping higher taxes and colder weather. The population has grown by an impressive 7% annually, contributing to the increase in demand for homes. However, the affordability of Palm Bay is beginning to unravel. The average home payment has jumped by $500 per month as mortgage rates have risen, making it more difficult for buyers to afford the inflated prices. Additionally, the city is experiencing a rise in property taxes, which has added an extra financial burden on homeowners. These combined factors are pushing buyers away, and Palm Bay is beginning to see an increase in inventory and price reductions. In 2023, the number of homes for sale increased by 30%, while sales dropped by 18%. The rise in home prices has also led to a slowing economy, with many potential buyers choosing to rent instead of buy due to the unaffordability of home ownership. Palm Bay's local job market is starting to show signs of stress as well, particularly in manufacturing and retail sectors, which have been hit by inflation and rising costs. In fact, the unemployment rate in the area has increased to 5.5%. which is above the national average. Experts predict that home prices in Palm Bay could drop by 12 to 15% in 2025. As the housing market cools and affordability becomes a major issue, buyers may find themselves in a better position if they wait to purchase in the coming years. Palm Bay's market is set for a major correction, and it's likely that prices will return to more reasonable levels by 2025. Number 4. Lakeland, Florida. Lakeland, Florida has seen some wild fluctuations in home prices over the past few years. The city's housing market has been on fire, with prices rising by an eye-popping 50% in just the last 4 years. The median home price in Lakeland has surged to $350,000 in 2024, and many experts are predicting a sharp downturn in prices over the next 12 months. Lakeland's housing boom was driven in part by people looking for affordable alternatives to nearby cities like Orlando and Tampa. With its quiet suburban feel and relatively lower cost of living, Lakeland quickly became a popular choice for buyers in search of a more affordable place to live. The city's population has increased by nearly 5% annually as people flock to the area in search of better housing options. However, the rapid rise in prices has caused the market to become overheated. The combination of rising interest rates and inflation has made homeownership more expensive, leaving many buyers unable to afford homes. A $350,000 home now costs about $2,400 per month to finance, which is a significant jump from just a year ago. As a result, demand for homes has started to taper off. Home sales in Lakeland have dropped by 17% in the last year, and inventory levels have skyrocketed by 30%. Sellers are beginning to cut prices, with many properties seeing price reductions of 5 to 10% just to attract buyers. Furthermore, Lakeland's local economy is showing signs of strain. The job growth in the area has slowed, with sectors like construction and manufacturing experiencing job cuts and slower hiring. This has led to a slowing population growth, which means fewer people are moving into the city and fewer buyers are entering the housing market. Experts predict that home prices in Lakeland will drop by 10 to 15% in 2025 as the market adjusts to slowing demand and rising affordability issues. If you're considering purchasing a home in Lakeland, it might be worth waiting a bit longer for prices to stabilize and become more affordable. Number 3. Austin, Texas. Austin, Texas has been one of the hottest real estate markets in the U.S. over the past decade. Known for its booming tech scene, thriving music culture, and overall appeal to young professionals, Austin attracted masses of people looking to call it home. In 2024, the median home price in Austin reached $550,000, a huge jump from just a few years ago when it was around $350,000. The city's rise in popularity was fueled by people moving from places like California, New York, and other expensive states. However, recent signs are pointing to a cooling down in the market, and experts predict price drops by 2025. Austin's rapid growth has been largely driven by its booming tech industry, with companies like Tesla, Apple, and Google setting up major hubs in the city. The influx of tech workers led to a population increase of around 10% between 2020 and 2023. As people flocked to Austin for its lower cost of living compared to Silicon Valley or other tech hubs, demand for homes surged. The housing market was on fire, and home prices climbed rapidly. At one point, Austin was seeing an annual appreciation rate of 20%, which was among the highest in the nation. However, as mortgage rates rise, the market has begun to show signs of stagnation. The average 30-year mortgage rate in 2024 is hovering around 7%, making it more difficult for buyers to afford homes, particularly in a market that has already experienced such significant price hikes. Monthly payments for a $550,000 home have increased to about $3,600, which has priced out many potential buyers. In fact, home sales in Austin dropped by 13% in 2023, and the inventory of homes on the market increased by 25% in just the past year. As demand cools, home prices in Austin are expected to drop by 10 to 15% by 2025. The high-tech market that once powered the city's economy is showing signs of slowing, and tech companies are cutting back on hiring. With fewer people moving to Austin and more homes sitting on the market, the city is looking at a real estate correction in the near future. If you're considering buying in Austin, you might want to wait it out a bit longer before jumping in. Number 2. Denver, Colorado. Denver, Colorado, also known as the Mile High City, has been another standout in the real estate boom, with home prices climbing at a rapid pace over the past decade. In 2024, the median home price in Denver reached about $600,000, which is a massive increase from the $400,000 median in 2018. Known for its proximity to the Rocky Mountains, stunning outdoor lifestyle, and thriving job market, Denver attracted people from all over the country. However, as mortgage rates rise and the housing market begins to shift, experts predict that the once booming Denver real estate market could experience a sharp decline in 2025. Denver's growth was largely fueled by the city's strong economy, with its robust job market in tech, healthcare, and energy sectors. The city's population grew by 5.5% between 2020 and 2023, and it became one of the most attractive places for young professionals and families to relocate. As a result, demand for homes surged, and home prices followed suit. The average appreciation rate in Denver reached about 15% per year during its peak, driving prices to levels that made the city increasingly unaffordable for many. However, things are starting to change. As mortgage rates hit 7% in 2024, the cost of buying a home has become prohibitively expensive. A $600,000 home now costs buyers about $4,000 per month, which has deterred many from purchasing homes. In fact, home sales dropped by 12% in 2023, and the number of homes on the market has increased by 20%. Sellers are starting to reduce their prices, with some homes seeing price cuts of 8 to 10% just to get sold. Looking ahead, experts predict that Denver's housing market could experience a 10 to 15% price drop by 2025. With affordability becoming a serious issue for buyers and inventory levels increasing, the city is heading for a market correction. If you're thinking of purchasing in Denver, it might be worth holding off and letting the market cool down a bit before diving in. Number 1. Cape Coral, Florida. Cape Coral, Florida, has been a popular destination for people looking for waterfront living, without the high prices of more famous cities like Miami or Fort Lauderdale. The real estate market in Cape Coral exploded in recent years, with home prices increasing by 55% between 2020 and 2024. As of 2024, the median home price in Cape Coral reached around $400,000, a dramatic increase from $260,000 just a few years ago. However, this boom seems to be unsustainable, and experts are predicting a sharp downturn by 2025. Cape Coral's real estate market took off as buyers sought out affordable waterfront properties with easy access to the Gulf of Mexico. The city saw an explosion of relocations, particularly from Northeasterners, who were drawn by the Florida lifestyle and affordable homes compared to other coastal cities. The area's population grew by nearly 6% per year from 2020 to 2023, further pushing up demand for homes. However, as mortgage rates have surged and prices have risen to unsustainable levels, Cape Coral's housing market is beginning to show cracks. The $400,000 median home price now requires a monthly mortgage payment of around $2,500, which is putting a strain on many potential buyers. Additionally, Cape Coral has seen a flood of new construction, and inventory levels are rising. In fact, the number of homes for sale increased by 22% in 2023, while the number of sales dropped by 18%. Experts are predicting that Cape Coral could see home prices drop by 12 to 15% by 2025 as the market adjusts. With rising mortgage rates and an oversupply of homes, the city is heading for a real estate correction. Buyers may want to wait for the market to cool off before committing to a purchase.